Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Thursday, December 5th, 2013. Let's jump right into the charts here. There's a lot going on today. First, we're going to start off with the S&P 500 E-mini futures. You're going to see that the futures were trading higher into the 1794 level, but just came down pretty sharply after the U.S. Reported its GDP that was higher than expected. So gross domestic product, after being revised, I believe it was revised higher to 3.6%. The estimate was 3%. So big move there in revised GDP. I don't know if you could believe it or not, but either way, once that GDP number was released, you could see that the futures came down. They are off their worst levels, but nonetheless, futures did come down on the back of the thought that Fed tapering will begin in December. So the Fed does have a meeting, I believe, on the 17th and 18th of this month. And right now the market is thinking, hey, if the GDP is good, these guys have to start to taper. You also had weekly jobless claims coming in at 298,000 versus the estimate of 310,000. So that was better than expected as well. So two numbers in a row, and you could see that we're better than expected, causing the market to go down. Bad news is good news, and good news is bad news. It's a flip-flop world, but that's the world we live in. So anyway, futures are trading right now at around 1791 and a quarter. They are off their worst levels, but again, we'll see if tapering does come into play. I guess this is going to restrain the market from going up over the next several days. So keep that on watch. At least that's my thoughts. Let's take a look at a few other things that we have out here. One, the European market after this news is basically flat across the board. The London FTSE 100 is flat, German DAX is flat, French CAC 40 is flat, Milan market, which is Italy, and the Spanish IBEX 35, all basically flat on the session. So we can't make too much out of that right now. It's really a flat tape. Now last night in Asia, the Nikkei 225 index finished down another 1.5%. So again, there you go. We're seeing some weakness coming out of Japan over the last couple nights. It looks like Japan reportedly said that they're going to approve a $180 billion stimulus bill. These guys are already printing 3 times the amount of money that Ben Bernanke is printing. So again, that's the plan in Japan. Just keep printing, and good things will happen. In any case, market fell 1.5% last night. I think traders got to look for more of a pullback in Japan in the near term. I would think somewhere around the 14,400 level is where the Nikkei 225 wants to end up. But either way you slice it or dice it, decent little sell-off. So don't look for strength in the Japanese ADRs today unless you see the dollar-yen go up. If the dollar-yen goes up, and it is going up at the moment, then I think traders can look at the Japanese ADRs a little bit closer today. If you take a look at the dollar-yen, and we'll just go over to a 10-minute chart here, you can see you got a quick spike after the GDP report in the United States. So a quick little pop. We'll see if that lasts. If that moves up, I think Japanese ADRs, American Depository Receipts, that means stocks like Toyota Motor, Honda Motor Corp, Sony, things like that would trade higher. But if this comes back down, do not expect much action in the Japanese ADRs. Let's take a look at some stocks in the news today. First off, we're going to start off with Apple. Apple is in the news today. It looks like they signed a deal with China Mobile. If you ask me, the deal was kind of expected. We've been hearing about this thing for months now. Watch 582 on Apple. I'm not sure if it gets up there. It's already overbought. It's already extended. It's way overcooked in my opinion. But if it did get to 582, 583, that's where the stock should hit the brakes. That's where there should be a lot of resistance. So I would say my max move in the near term would be 582, 583. In fact, it's 582.85 if you want to know the exact number. So again, watch for Apple to stall out. If it even gets up there, I'm not sure it will. That's still about 10 more points from where it's currently trading, 9 more points from this level right now. But Apple is up on the news that it struck a deal with China Mobile. Let's take a look at CHL, which is China Mobile itself. And you can see that is overbought as well. I wouldn't expect much more upside. I think a lot of this news with Apple is already baked into the cake. And we'll see how it all plays out. But I would not expect much upside from China Mobile. In fact, it could be a faded news event just based off the fact that everybody knew about this well in advance. There's no surprise to the market. In fact, China Mobile has been getting bid up really for the past month since late October on the back of this news. So again, it really should struggle around the 56.50 level, 56.75. I don't really expect China Mobile to get above that level. Taking a look at a few other stocks in the news here, it looks like Dollar General is in the news. Stock is trading up a little bit here. So this is a strong move for Dollar General, in my opinion. It's coming off of a low point on the chart, which makes it a pretty strong move. So respect Dollar General right now. I'm not sure if it does trade through the 58.25 level, then the stock can go to 59.75. But be careful. Do not try to fade Dollar General. Very, very strong market, at least at the moment. A lot of retail sales are coming out. Costco is another stock that just reported retail sales, and you can see the stock is trading down. If Costco gets down to around 117.80, 118 level, I think you can buy Costco. So keep that on the radar. That stock gets down to that level, I think you could probably scalp trade that on the long side. The level would be between 118 and 117.80. I think Costco looks pretty good right around that area. Hard to pick it out to the penny at this time of day, but nonetheless, I would be a buyer of Costco for a scalp long and at those levels. So watch those levels. If Costco does get down to that area, that should be a decent level in the near term. Looking at oil this morning, we do have, where's my oil chart here? Okay, we do have light sweet crude trading up another 19 cents. So if we go to the USO, which is a good proxy for light sweet crude, you'll see that's trading at around 34.96. Oil is holding firm. Little bit of resistance here at around the 35 level on the USO, but ultimately it has a little bit more upside in the cards according to my charts. Around 35.75, 35.80 is where the USO will really hit a wall of resistance and start to stall out. But right now it's held up pretty well in the near term. Looking at gold this morning, gold is very, very choppy and volatile. Yesterday gold had a big move up. Today it's having a big move down. So again, gold erasing all of its gains from yesterday. Gold futures right now are down about 23.5 points to 1223.5 per ounce. If we take a look at the GLD, you'll see some whippy action here. You can see yesterday's big move, and then the GLD right now trading right back down to around 118.08. Now, this is what you want to do for gold, all you gold traders out there. Keep the dollar-yen chart up. You want to look at this dollar-yen chart. If the dollar-yen, which I'm going to put up right now, starts to come back down, gold will probably stabilize and maybe get a bit higher. Right now, gold is selling off on the fact that we had a strong GDP number, and everyone is thinking that QE-3 Unlimited is going to start to come off, and the Federal Reserve will start to taper its $85 billion a month money printing program. So that is the reason why gold is coming down. Now, watch bond yields today as well. That'll give you a little bit of an indication of what's happening. Right now, bond yields, I believe, are around 10-year note yield is around 2.87%. So I don't have that chart available on this platform, but the actual number is around 2.87%, which is, one of the highest levels we've seen in quite some time. So traders want to keep that on watch going forward. But right now, yields are moving higher as well. And again, anytime yields move up the way they are, they're actually at 2.864%. So they pulled off a little bit. But keep the yields on watch today. That could hurt. Higher yields could hurt the housing stocks. Okay, so stocks like Lennar, stocks like Toll Brothers, and you have the mortgage. You have the stocks like SPG, Simon Property. That could be under some pressure as well if yields spike much higher. I have a hard time thinking yields are going to go too much higher, but hey, you just never know. Right now, they are moving higher before the opening bell. So that's where we're going to leave it. We do have a couple of gap plays. If you want those, they'll be posted up in the chat room at 9 o'clock this morning, which is about 15 minutes from now. So again, I want to wish everybody a great trading day. Futures are down $1.25 at the moment on the back of a stronger GDP number, which tells us Fed tapering. The odds of it have increased, at least for the December meeting. So we'll see how that all plays out and shakes out, and I'll see everybody on the chart. Take care, everyone.